Hello friends, welcome to the mini marathon of सेंट्रल बैंकिंग। आप सभी का स्वागत है सेंट्रल बैंकिंग के मिनी मैराथन में। देखिए, इसमें मैं लूंगा इंग्लिश में क्योंकि बहुत से टर्म्स इंग्लिश में है इसमें, तो हम लोग इंग्लिश में मैक्सिमम बातें करेंगे, ठीक है। बट इट इज इजीली एक्सेसिबल, आपको इजीली समझ में आ जाएगा, कोई बड़ी बात नहीं है, ठीक है। तो क्योंकि इसमें सारे टर्म्स जो है वो इंग्लिश में है, तो हम लोग मैक्सिमम इंग्लिश में बात करेंगे, ठीक है। अब देखिए, CAIIB दिसंबर 2025 इलेक्टिव फॉर सेंट्रल बैंकिंग मॉड्यूल A+B। तो अभी हम जो है ना सारे इंपॉर्टेंट क्वेश्चंस करेंगे इसमें। ऑल द इंपॉर्टेंट क्वेश्चंस विल बी कवर्ड, ओके। So now everyone kindly follow the session completely, share it with your friends, like the video, subscribe to the channel, click on the bell icon. सभी दोस्तों के साथ शेयर कर लीजिए एंड लेट्स स्टार्ट, ओके। चलिए, which of the following instruments PDs don't deal with in the primary market? So which are the instruments which the PDs don't deal in, primary dealers don't deal in? Firstly, what is the primary dealer? Now you are in the central banking elective, so you must know what is the primary dealer, okay. What is the primary dealer? So what is the primary dealer? Yes, anyone? See, a primary dealer is an institution that has been approved by to trade in the government securities directly, okay. Means it has been approved by government only, okay, by RBI basically, to deal directly in the securities, okay. National securities relating to national government, acting as an intermediary. Now the important point over here is they underwrite the new government debt. What is underwriting? They will underwrite the thing. See, underwriting means what? They give you the confidence, means guarantee. Underwriting means guarantee. So suppose if government is issuing some bonds, some issue, new IPO you can call it, simple language, new IPO of bonds. So government is concerned whether this full IPO will be sold or not. At that time, these primary dealers come in the market, or they come in the picture and they tell the government, we give you the guarantee, you issue the bond. That is the role of primary dealer. Primary dealer also deals in, means makes a way for trading these securities in the secondary market. That is also their job. These are companies, institutions, okay. More on this in the paid classes, in the PDFs. So now give me the answer. Which of the following instruments PDs doesn't deal with in primary markets? Is it related to, is it government securities, is it state government, is it cash management, or is it certificate of deposit? What do they don't deal in? Yeah. See, kindly understand, PDs are expected to support the primary issue of the dated securities of the central government and state government, T-bills and CMBs. So, see, these primary dealers are expected, what is their job basically? They are expected to deal in the, means support the primary issue of these securities. Government securities, state government, CMB is also there, CD is not there. So certificate of deposit is not dealt with. Kindly note, they don't deal in CDs. Okay, certificate of deposits. This is the answer. They don't deal in CDs, certificate of deposits. Got it? See, these are many new questions which we don't deal in on a daily basis. Next one. What is mandated percentage set for combined CRAR of all standalone PDs? Now, primary dealers, see, many questions, means this primary dealer is an important topic in your exam. So, I'll be taking many questions on that. So now what is the answer for this? Minimum CRAR for the primary dealers. Now you understand the meaning of CRAR? Capital to risk weighted asset ratio. This is there in your BFM also, right? So capital to risk weighted asset ratio. Now for the banks, for banks it is 11.5%, 9 plus 2. But for primary dealers, what is it? Yes, it has been set to 15%. Primary dealers, the minimum CRAR is 15%. Kindly note, 15, 1-5. Okay? Next one. What is the minimum success target percentage set for the primary dealers in primary auction of treasury bills and cash management bills? Minimum success target. Now, what do you mean by this minimum success target? Set for the primary dealers in primary auction of T-bills and cash management bills. Primary auction. What is primary auction? See, two things you need a clarification. One is what is primary auction, and second is what do you mean by the success rate? Okay. Primary auction means what? See, primary auction means whenever government issues the bonds, means T-bills and the CMBs, cash management bills, for the first time. Now, what is CMB? Treasury bills you might have heard, but what is CMB? How many of you have not heard CMB? Have you heard CMB? How many of you have heard CMB? Type yes in the comment section. Yes? Correct? Cash management bills are those bills which are less than the treasury bills, less than 91 days. These are less than 91 days. Kindly note, cash management bills. These are the most liquid bills. So now let's focus on this question. Success target means what? It means what? Suppose if I issue, as a government, I issue the this auction. If I do the auction, then what should be your role as a primary dealer? See, primary dealers are these financial intermediaries mandated to take part in all-round development of the primary and secondary government securities market, underwrite the issuance of government dated securities, and participate in primary auctions. They are also mandated to achieve a minimum success ratio of. See, their role is what? Participate in the auction. Government will auction these treasury bills. Government means RBI basically. Or government does it through RBI. So RBI will auction these treasury bills and CMBs. Who has to participate? When I auction something, there should be some buyer, right? So who will be the buyer or who will deal in that? So these primary dealers act as an agent. They will contact all these banks. Take this, like this. So what should be the success rate for them? The success rate for them is set at 40%. 40%. See, ultimately understand, these treasury bills and the CMBs, who will purchase it? Net. In the end, it will be purchased by the banks and the financial institutions. So primary dealer is not the final person who will take it. He is like the dealer, distributor. In any business, he is like a distributor. He will take it from the government, sell it to these guys. Now, what is the role of this primary dealer then? Primary dealer then? He will take it in bulk and then distribute it in small parts to all the banks and financial institutions. Okay? So that is the basic role. See, you need to understand everything works on the same model of manufacturer, distributor, retailer, customer. In FMCG, we have the same thing is over here. Okay? The liquidity support availed by the primary dealer will be repayable within a period of dash days. Now, liquidity support. What is liquidity support? The liquidity support will be given by the RBI or government. Basically RBI. It will be given by the RBI. What do you mean by this? Why should RBI support this primary dealer? When the primary dealer wants to get the auction, means get the bonds, treasury bills from the government or even the dated securities. See, primary dealer doesn't only deal in these T-bills and CMBs. He deals in this dated securities also, long-term securities also. So whenever he will get the auction, he'll need some money. It's a sort of finance, like we finance the customer. Same thing is over here. So this finance will be given by RBI to this primary dealer. But he has to repay it. After all, it's a loan. He has to repay it in how many days? In how many days will he repay? Yes, in how many days? The liquidity support given to this primary dealers is to be repaid in 90 days. Kindly note, it is to be repaid in 90 days. What is the frequency of revising PD wise, primary dealer wise, liquidity support based on the market performance? Frequency of revising. Frequency of revising means I'll have to check which primary dealer is working better, who is not achieving the target of 40%, who is achieving, who is overachieving. All that I'll have to check. After all, it's a performance based appraisal like we have in our banks. Same thing is over here. So now what is the frequency of this appraisal? Annual, half yearly, quarterly and monthly. Here I have already given the answer. It is half yearly. See, star marked I have already done. So it is half yearly. Got it? So kindly note, it is half yearly. When has RBI introduced the system of primary dealer in GSEC market? GSEC market, now look at this, government securities market. When did RBI introduce this? When did RBI introduce the concept of primary dealers in government securities market? Yes, was it in 93, 94, 95 or 96? Think, comments, everyone in the comment section. It is 1995. In 1995, RBI introduced this primary dealers. Why did RBI introduce it? Anyone? Any idea? Why did RBI introduce it? Because see this, in 1991, we opened the economy, right? That Narsingha Rao government, we opened the economy. So in that case, the huge funds were required. Now these funds, how will government get the funds? They will sell the securities. So for selling the securities, there need to be a buyer. Now buyer, who is the buyer? Banks, financial institutions, mainly these two. Now, how will the government go and get them in the market? Will it go and contact everyone? So it's not possible. So what happens? The distributor system comes in. See, this is government or RBI, we'll call it RBI, and this is the bank. So bank has to purchase and RBI has to sell. But RBI can't go and speak to every person, or government can't go and speak to every person, every bank, that kindly buy this, this is a new security, this is what I have brought in. So this is same as the distributor. So this PD acted as a distributor. So what does this PD do? Distributor. What did this PD do? He purchases in bulk. Okay, and then distributes it to bank 1, bank 2, bank 3, bank 4, like this. Same, see, everywhere in the world, the model works the same way. Right? So the logic is same. See, have you seen the MRs? Medical representatives. What do? They go to all these doctors, right? And they go to the doctors and tell them, see, this is the new medicine which has been brought. This is the new medicine which has arrived. Same thing is done by the primary dealer, right? Papi pet ka sawal hai, everyone, isn't it? But remember, primary dealer is not a single person. You might think primary dealer, a person. No, it's a company. Okay? Which of the following NBFCs collect and provides information about the customer's financial assets in a consolidated, organized and retrievable manner to the customers and others as specified by the customer? So which NBFC will collect? Now look at this. This is a new concept which has been brought in. Which NBFC collects and provides information about customers' financial assets in a consolidated and organized and retrievable manner? To whom? To any party which is a member. Okay? and the permission is first taken from the customer. Otherwise, what will happen? Your information will be shared with anyone. So your first consent is taken. But which NBFC does this? ICC, CIC, NOFHC, and NBFC AA. Now this is a difficult one, and this will open the doors for a new discussion. So what is the answer for this? Think everyone. The name is there. In the name itself, you will see some difference. Yeah? What is it? Everyone. It is NBFC AA. Kindly note AA. Now that's why I told this will open the window for new discussion. What is the new discussion? What is AA? AA is an account aggregator. Account aggregator. Now some of you might be knowing this. What is an account aggregator? For those who don't know, it's a new concept in banking. What is a new concept? Up till now, what do we know? Up till now, we know CIBIL, right? CIBIL. What does CIBIL do? I'll write it over here. Say this. AA versus CIBIL. AA versus CIBIL. What does CIBIL do? Not only CIBIL, there are 4 companies. CIBIL is just a name given. Okay. Experience, Equifax, okay, and that Cliff Highmark plus CIBIL. These are the 4 companies. Now, what does CIBIL and these companies do? They check your previous loans. Pay attention. They check your previous loans. So, only loans they check. Loans means how have you repaid the loans? Have you defaulted any time? How many times have you defaulted? Right? All these things are checked. Previous loans. But now, the financial world has moved ahead. Not only loans. I am a person, so I might be having loans, I might be having mutual funds, I might be having insurance, investments also. I will be paying my utility bills, electricity bills, some other bills, other utility bills. I am a 360-degree person. I am not only a person who is dealing in loans. I will be having savings account, current account, FD. So, account aggregator will carry the information of all these concepts. It will carry the information of saving, current, FD, then your MF, then insurance, then what? Your loans. Loans will also be there. Loans will also be there. Loans, all the loans. Okay? Loans will also be there. Loans. Then anything else, your utility bills, electricity bills, shopping habits. Shopping habits are also captured under AA. How many times do I go to the mall? How many times do I go to the movies? Now this company AA will collect this information and give the information to the concerned party. After taking your consent, it won't give it like that only. Okay? It will take the consent of yours and then give it. Now you will ask me, sir, but I'll just, whenever I give the consent, I don't check, tick, 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 yes, 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 and I go ahead. The rule is like this, whenever it gives a consent, this consent, it should not be a blanket consent. Okay? So blanket consent is not allowed. So kindly note, so okay, there are various ways of doing it. Okay? So this will be dealt with by the account aggregator. So more on this in the paid classes and in the PDFs. Okay? Next. On the basis of their function, in how many categories NBFCs have been divided? What is the division of NBFCs? In how many categories? Yes? In how many categories are NBFC divided? Everyone, in how many categories are NBFC divided? Yes? Firstly, how many NBFCs do you know practically? NBFCs we generally know are two only. Mainly we know two. Deposit taking. This is one. And second one is not taking. Deposit, they don't take the deposit. So no deposit. These are the two main types of NBFCs. Okay, but these are just two. There are more, like account aggregator. This is the third one. Like something else. There are total 11 types. 11 types of NBFCs. The classification is 11 types of NBFCs. Kindly note. Again, there are total 11 categories of NBFCs. Next one. Which of the following NBFCs are not under the regulation of SEBI? Not under the regulation of SEBI. Stockbroking companies, merchant banking companies, nidhi companies, companies running collective investment schemes. Not under the regulation of SEBI. Yes? Now this is the important one, and this question, this answer which I will give you, you will see it in the exam also. In exam, compulsory question is there on this type of company. Yes? So the answer is nidhi companies. Nidhi. That's what I said. This question will be definitely there in the exam based on nidhi companies. Now what are nidhi companies? Nidhi companies is simple. It's like the SHG, self-help group. Like, I'm not saying exactly. It's like the SHG. Okay. What does it do? The role is very simple. It's an NBFC that operates on the principle of mutual benefit. Now, mutual benefit operates on, means even SHGs operate on the mutual benefit. Even cooperative banks operate on the concept of mutual benefit. Encouraging thrift and saving among the members. Encouraging thrift and saving. So, it encourages the members of this company, means itself only, to do more savings. So, similarly, see, it is similar to your SHG, it is similar to your cooperative banking concept, because everything is based on the concept of cooperation. Okay? Got it, everyone? So now, clear? Which of the following is the major function of money market? So, this is an important chapter in your module A in central banking. Which of the following is the major function of the money market? So, check this. To provide an equilibrating mechanism to even out the gaps in the demand for and supply of short-term funds. So, equilibrating mechanics to even out the gaps. So, what do you mean by such difficult words? See, it's simple. To match the demand and supply. That's the basic meaning. To match the demand and supply. That's the basic meaning of this. Okay? Second, to serve as a focal point for central bank intervention for influencing liquidity and the general level of interest rates in the economy. Now, how does a central bank focus on this? See, pay attention. What is the role of central bank in influencing liquidity? Central bank has various tools in credit and monetary policy. What are the tools? One is repo, reverse repo, okay, RR I'll write, right? Then they have LF facility, LF, liquidity adjustment facility, right? Then they have MSF facility, MSF is also given, MSF. Then SDF facility, SDF, okay? They have T-bills to be issued, T-bills. So RBI will use various methods, okay, to intervene for intervention into the influencing the liquidity. If the liquidity dries up in any market, RBI will give special provisions. Okay, they will issue special bonds or they will issue special, they'll take back the bonds and give the money through reverse repo. If there's huge liquidity, okay, then what will it do? If it's huge liquidity, it will suck the liquidity through reverse repo. If the liquidity is less, then it will give the money to the banks by repo transactions. So these are the various tools. So influencing liquidity and the general level of interest rates. So interest rates will be affected. Kindly note, interest rates are always affected in any bank. Okay? Interest rates are always affected in any banking system as such, depending on the external conditions. Okay? Depending on the external conditions. If there is a war-like situation, immediately things go in the reverse direction. Interest rates, many of the countries try to hike the interest rates. So it depends on the external situations, and RBI has to be the focal point on this. Focal point means controlling authority. To provide reasonable access to providers and users of short-term funds to fulfill their borrowing and investment requirements at an efficient market clearing price. Now understand what I mean by this: providers and users of short-term funds. Provider means the one who gives the money, provides the short-term funds. Okay, means basically here we are talking of interbank lending. Interbank lending means bank-to-bank lending. Bank-to-bank lending is generally done on the basis of either repo or MIBOR, anything, MIBOR or repo. The banks fix the rate on their own. Okay. So between them, it's basically a OTC product, over the counter. One bank will deal with other bank individually, and the rate will be decided between these two banks. But what is the role of RBI then? Central bank. The role of central bank over here is to provide reasonable access. Access means the liquidity movement should be very easy. That's the basic. RBI is basically the facilitator, isn't it? So if it facilitates the easy way, now how does it do on the easy way? It does it through NDSOM. Okay, NDSOM is a delivery system for basically the settlements. Okay, it is for bonds. Like we have demat account, stock market for stocks. Similarly, we have NDSOM for bonds. So that's the role of facilitator. So the question over here is major function in the money market. The major function in the money market is all of the above. Okay, all of the above. That is the major function. Got it, everyone? Understood? Important question this was. Got it? Move on. Next. Next one. What is the primary focus of supervision by central banks? What is the primary focus? See this: capital adequacy, management quality, earnings, and all of the above. It's like, see, this is like asking what is most needed to you, water or food? What is more needed to you, water or food? Both, isn't it? Capital adequacy, is it not the primary focus? What is capital adequacy? CRAR. Minimum CRAR as per RBI is 9% plus CCB, right? 2.5%. So it is 11.5%. This is required but obvious, right? So primary focus is CRAR. Basel norms. Basel is a bit lesser, not that strict. See, Basel requires CRAR as 8%. RBI requires 9%. Basel requires 8%. RBI requires 9%, 1% extra. RBI is very strict as compared to Basel norms. It is more stricter than the Basel norms. So that's why our banking system is very strong. Okay? Management quality. Now, management quality means who all are there in the top management as well as in the board of directors. whether there are any technical consultants, technical directors, whether they are there. So who are there? Management quality. Okay. So this is very important, management quality. Otherwise what happens? If non-technical directors are there, they won't understand anything about loans. Right? Next, earning, profitability. Profitability, earning means profitability. Profitability is the prime focus of any bank nowadays. Because without profit, no bank can exist. Even public sector banks, government is focusing on you should earn your own profits. Right? Now look at the public sector banks also. The culture in public sector banks has become more of a private bank. Daily pressures, daily insurance, daily KCC, daily third party. Why is this? This is because the margins are drying up. Profitability is the main issue. Everyone has to conquer. Everyone has to capture the new customer base. And customer base is growing. See, understand the simple logic. If GDP of our country is growing, it means, see, there are two things. Population of our country is growing and GDP is also growing. Both are growing. So if both are growing, banking should grow. But obvious. Because new customers you are getting, means if they are growing, it means many of them are growing above 18 ages also. You are getting new customers. And GDP is growing means money is also growing. Okay. Also, if you check the Gini coefficient, the Gini coefficient in our country is roughly very less, 0.29, means it's equally distributed. Okay. So earning, all of the above is the answer. All of the above. Okay. What is the primary focus? So all of the above. Capital adequacy, management quality, earning, and all of the above. What is the main reason for giving regulation authority to central bank? Main reason. Regulation authority. See, regulation. So number one, inflation. Number B is collapse, bank collapse. Number C is corruption, and all of the above. So why is the regulation given to RBI for all the banks? Many of you will think the answer is all of the above. Corruption, bank collapse, inflation. Many of you will say all of the above. But means this is not the logical answer. Corruption can be anywhere. Okay, it can be anywhere. So corruption is not the primary reason for giving RBI the control. Okay, so this is out. There can be the corruption in RBI also. Means I'm just saying example. Means who can't say that? Means why can't this anything happen? And corruption can be anywhere, isn't it? So corruption, this is not the primary focus. And corruption for countering the corruption, we have anti-corruption department that will take care of this. RBI is not there to focus on corruptions, right? Inflation. Now we'll say inflation is right. Inflation is the prime focus of RBI. That is the prime focus. But that is not under this regulation. That is under credit and monetary policy. Credit and monetary policy, right? Policy, okay? So the main reason for giving regulations, bank regulations to RBI is bank collapse. B is the right answer. Okay, B is the right answer. Got it, everyone? Which of the following countries has passed the Emergency Bank Relief Act? What is this Emergency Bank Relief Act? US, UK, France, US and Germany. What is Emergency Bank Relief Act? I'll explain you. First you give me the answer. There is a very draconian or danger situation in Emergency Bank Relief Act. I'll give you that. What do you mean by this? Yeah. So what is the answer? The answer over here is, let me see. Okay, in the meantime, I'll explain what is this Emergency Bank Relief Act. One of the rules, regulations of this Emergency Bank Relief Act are bank can limit your withdrawals from the bank. Means suppose if I am having, let's say, $1 lakh, okay, with the bank, and I want to withdraw it. Okay, so bank can restrict me, saying that, see, $1 lakh you are having with me, agreed, they are your money, but I will allow you to withdraw only $3,000 in, let's say, 1 week, 3,000 in 1 week. They can say 3,000 in 1 month. It's up to the bank. This is one of the most difficult regulations in Emergency Bank Relief Act. But which country has passed it? The country which has passed it is obviously USA. Okay, USA has passed this rule. So in USA, tomorrow if the banks say that I won't let you withdraw the money for next 1 month, I won't let you at all, no withdrawal is allowed, you can't do anything. Okay, you can't do anything. So this is the Emergency Bank Relief Act. Which of the following banks was established by East India Company in 1720 to increase the trade? So 1720. Okay, kindly remember this bank, there were 3 presidency banks. Okay, there were 3 presidency banks which were combined to form the Imperial Bank. So the 3 banks were Bengal, Bombay and Madras. They were combined to form the Imperial Bank. Imperial. Okay, and then this Imperial Bank became SBI in 1955. Okay, 1955, this became SBI. So these 3 banks were combined to form the Imperial Bank. But now the question is not that. Question is what? In 1720, which bank was formed? This was just an extra knowledge. In 1720, Bank of Bombay was formed. Okay, Bank of Bombay was formed. Okay. So Bank of Bombay was formed in 1720. In which of the following year Paper Currency Act was passed? Paper Currency Act means nowadays what we use notes. This act was passed when? Paper Currency Act. Think everyone. Think of it. In which year was Paper Currency Act passed? Yes? Yes, it was passed in which year? Yes, which year? Think everyone. It was passed in which year? Paper Currency Act. Paper Currency Act was passed in 1861. 1861 Paper Currency Act was passed. Okay? When the Department of Banking Operations of Reserve Bank of India was organized. Now see this, we want specifically DBOD. Okay? Department of Banking Operations, or we call it DBO. Okay? When was this department formed? August 1945, June 1945, July 1945 and September 1945. Very nearby answers. Okay? Very nearby answers. So it was in August 1945. Okay? It was in August 1945 that the DBOD was formed. Okay? Got it? The role of central bank as a banker to government gained renewed relevance, particularly during the times of war. See, this is the main point. We always study that role of central bank is what? Banker to the government. But why banker? What do you mean by banker to government? During the world wars, when there was a huge shortage of money, at that time many of the central banks were formed. At that time, Means specifically you can say that central banks were formed to fund the government only. So that's why this RBI, means not RBI specifically, all the central banks in the world were formed during that time only. You see, general period of formation of all the central banks of the main countries, you will find it during that time only. World War I and World War II, mainly World War II. So funding the government was an important part for the war, and this was basically done for the Britishers. Okay? The current professional thinking, however, is that the role of central bank as a debt manager in a sense is conflicting with the core objective of central bank, namely price stability. See, what is the second role of RBI or second role of this central bank, any central bank? One, price stability. So price stability is a very important now. Okay? Price stability. If the prices are not stable, if the inflation rises, central bank will be in a, means the worthiness of central bank will be in a problem. People will stop trusting the RBI if prices go up. Okay, that's why price stability is one of the major roles. But this always conflicts. Conflicts with what? Conflicts with this funding the government. This role and this role will always conflict with each other, will be in conflict. Okay. So, but second role of this is price stability. Kindly note. One is banker to the government. Second is the banker to the government. Second is price stability. Many central banks pursue price stability as a major objective of monetary policy, isn't it? See, if the prices are stable, then only the country, any country, means it works well. You see, in various, our neighbors only, check our neighbors, Pakistan, Nepal, Sri Lanka, Bangladesh. Why are there so many riots, so many uprisings? Because of main problem is unemployment and price instability. Prices are huge. You check the inflation rates over there. Check the inflation rates. Okay? So things are going bad to worse in those countries. But in our country, inflation is around 1.5 CPI and WPI is almost 0. So in our country, this will never happen because people are happy. Even the Gini coefficient, which we have just now I was checking, Gini coefficient is also, the lower the Gini coefficient, the better it is. So we have 0.29, which is one of the best in the world. Okay? So Gini coefficient. That's why price stability is an important part and money is distributed across all the people. It's not that only few are having the money. Gini coefficient will always give you whether the money is distributed across all the people or money is kept in some hands. Okay? Remember this coefficient, Gini coefficient. So many central banks feel that price stability is the main issue. Okay? As a debt manager of government, it was observed that central banks financed government deficits partially. Now, there is a rule also in our country that the deficit of the government should not go beyond 3%. 3%. Okay? There is a FRBM Act. That FRBM Act gives accountability to the government for spending. Okay? So, you can partially finance the government's deficit, but not fully. Government has to find the sources from itself. RBI will not finance it. Okay? The process of extending credit to government puts pressure on the monetary policy of the central banks as they need to create excess money to meet the government needs, right? Same thing is happening in USA right now. Their debt is almost, what, 37 trillions now? 37 trillion. And the GDP is around 27, 28 trillion. Okay? So that is also, that GDP is also related to services. So real GDP is very less. So that is putting a huge pressure. And what are they doing? They are just printing the money. In last 8 years, they have printed some 8 and 8, $16 trillion. So funding the government expenses by central bank, this is the best example of USA. This is, once this happens, the government, the countries are in a problem. Okay. So the process of extending credit to the government puts pressure. Obviously, it will put pressure, isn't it? Because either you can fund the government or you can fund the people. Simple logic. See, this maintaining price stability means what? Funding the people in other sense. So either you can do this or you can do that. Both you can do. Government has to find the ways to fund itself. And this is going on well in our country. The theme of central bank independence has gained thrust, particularly in aftermath of Vietnam War in 1960s and 70s. The expansion of world liquidity and enduring inflation. So, after this Vietnam War, means basically US-Vietnam War, US-Vietnam War, where US lost, kindly note, USA lost heavily in Vietnam War. And because of this, central bank, means it was found that central bank was funding that Vietnam War in their case. So, to remove this blockade means in future also they thought that every war central bank will go on funding. So, the autonomy of central bank came into existence over there. The undue fiscal and monetary expansion in Latin America gave further impetus to the view that central bank should be independent of any government interference. So, this is very important. Autonomy of central bank is very important. Okay. If you have autonomy, then central bank can function. In our country, we have autonomy. Autonomies can be on various angles. Okay, there are functional autonomy, there are financial autonomy. Okay, there are three types of autonomies. You will study this in the topic. Another issue relating to central banks is that of its function of regulation and supervision of financial entities. This is one of the another roles. Regulation and supervision of financial entities. Okay. So basically it acts as a regulator of the banks. Not only banks now. Banks, NBFCs, private financial institutions. RBI is the regulator of all now. It's not only the regulator of the bank. This issue arises in the wake of the observation that the roles of regulator and supervisor are divergent, and entrusting these roles to a single authority, namely central bank, could lead to conflict of interest. So regulator also and supervisor also, both the roles are with the same entity. That's why people are saying that these should be separated or what. Not needed. You can have separate departments, right? Okay. And you can have separate checks on RBI also. Why to separate them? The new objective function assigned to the central bank is to focus on the price stability. Say this, price stability, with financial stability as an additional objective. So financial stability and price stability. Price stability means they have to look at the inflation. So inflation means monetary and credit policy. They have to check, RBI has to keep a constant check on CRR and repo. Okay. The core of modern central banking also consists of development of financial markets and instruments. This is an important role of RBI now, central banking. Role, development of financial markets. See, development of financial market means there should be a primary market and secondary market. Secondary market, if it is there, then only primary market works. Kindly note this. If there is a secondary market, means there is a buy and sell among the various participants, then only the IPO will work. Otherwise, why will anyone buy for the IPO? Isn't it? So, markets and instruments, financial regulation and supervision, management of government debt, administration of payment and settlement systems, and maintenance of external value of the currency. So, these are all the roles of RBI now. See this, financial regulation and supervision, already I have explained this. Management of government debt, see this, government means funding to the government. Admin of payment and settlement. So, payment and settlement systems, administration means as a sort of a controller or checker, an auditor of payment and settlement systems. Okay, it is also the regulator and it is also the supervisor, both. Okay, of payment and settlement system. Then and maintenance of external value of currency. This is one of the major roles of RBI. External value of currency means the rupee rate. The rupee rate should not, means not falling or increasing. Okay, it's not that. Otherwise, somebody will say, sir, now the rupee has fallen so much. So, is the RBI inefficient? No. These are the policies done. As far as your inflation is in control and your Gini coefficient is okay, kindly note the rupee value falling or this rising, it is always controlled in some way or the other by the government and the central bank. Okay? So don't immediately jump to the conclusion. If rupee is falling, don't jump to the conclusion that, see, rupee is falling means the country is going down. Nothing. Everything depends on inflation, GDP. Our GDP is rising. Okay? Depends on GDP, everything. Okay? So GDP as well as other points. So now before going, everyone, kindly note the new batch for central banking elective has just started. I'll be providing you with the PDFs, very important PDFs, which is taken from all your chapters. So you need to read that much only, that much. Plus, I'll be giving you the question bank, okay, in the classes. So that's enough for you. Join it ASAP. Those who are giving central banking as an elective, don't miss this and use the code. Kindly remember the code Y432. Y432. Okay? Say this. Look at this. 81% discount. And also download it through the app. First download the app and then purchase. Because of this, what happens? You get extra 1% discount. So join it ASAP. Okay? Because only few days are remaining. Okay? And the portion is huge.